It has been a flat day of the Indian rupee. The support came in on the back of strong equities, but it's the strong US dollar as well, which seems to be putting too much pressure there. Let's get in then. Manoj Rane, he's MD, Head Fixed Income and Treasury India, BNP Paribas, and he joins us live for this leg. Manoj, hi, welcome to the show. What's your sense of the whole host of data that we have seen coming in last 10 days? The CPI, the WPI, IIP numbers, trade deficit as well. How are you approaching the 28th Jan with all of this?
I think if I were RBI, I would focus on two critical things in the data which has come by. One is, of course, on the inflation side, and WPI as well as CPI there's only one watchword there, which is food inflation. Food inflation has come off very strongly, and if just from a numbers point of view, it is 18% down. What does that tell you? That tells you that the price pressures relating to food, which have been very erratic, are for the time being off. Even anecdotal evidence over the last couple of weeks into January seem to indicate that food inflation will continue to tick lower going forward. So I think from an immediate perspective, that part of concern should be out of RBI's mind for 28th January. What does that imply? That implies that any possibility of a rate hike is out. Market, of course, had got well ahead of itself, and I think many people are starting to talk about a forthcoming rate cut, which I don't think anyone believes will happen in Jan, but there is a fairly substantial part of the market which believes that March we might see a rate cut. The other thing I think which a lot of people have lost is that on the growth side, the IIP numbers indicate that growth has come off sharply, of course. But if you focus a bit there, you realize that consumer durables is where growth has come off the most. You've seen 21% fall in the November numbers on consumer side. And it's interesting because that's the Diwali month. The fact that consumer durables are off to that extent, with automobiles, with soft goods like refrigerators, etc., particularly being beaten back strongly, indicates to you that this category particularly relies a lot on financing. And the fact that financing is not cheap, given that RBI has continued to maintain, hawkish interest rate stance and rates have been high, implies that what RBI has been doing has possibly started to bear fruit because it has slowed down expenditure. It has also, to a great extent, brought under control, maybe not directly, but at least from a sentiment point of view, expenditure on food, etc. So my sense is that, I think it is about time for RBI to now look at and focus more on the growth aspect rather than purely on inflation as it has been for some time.
Manoj, that's about the domestic market that you summoned up. What's your sense with the international markets? Because we're hearing a lot of or seeing a lot of data, and this is the month then that Fed tapering also starts. Are you seeing those impact coming in?
I think data from the US has been more positive than negative, so it's in sync with the timetable on tapering. So I think tapering should play out as they have outlined, which is, of course, in my mind, as I've said to you before, Manisha, it's very positive because growth in the US, growth in DMs means that growth in India can't be far behind. And when 57% of our economy is service oriented and relies a lot on how DMs do in terms of how the software companies do, etc., I think overall it is positive in the medium to long term. Having said that, in the immediate short term, of course, it puts a few question marks on what kind of flows we are going to see into the country. Having said that, you saw 2013 end on a very, very robust note with 20 billion plus of inflows just on the equity side. So it looks like we possibly, purely from a perception point of view of investors globally, have turned the corner, and equity investors are not going to look back, and I do not anticipate that much concern on the currency side, led largely on FII type sell-offs. So which means it is positive for the currency. Of course, having said that, I don't think the currency appreciates much from here, but the concerns 6 months ago of a big run on the currency and huge depreciation, etc., I think that we can leave behind for the time being. So globally, I do think also the scenario is improved from a purely India perspective.
All right, so improving scenario, and that could really, in sense, calculate for a positive rupee going forward. With that, though, Manoj, thank you so much. Vijay, you too, for coming by and giving us a sense on all of those asset classes.